Hello, everyone, and welcome to another Altos Trading live strategy session. This is Richard Van Rich here with Jeff Tompkins. We're really excited to have you guys with us here tonight. Got a lot of great information to go over. This is going to be more of a laid-back session. Going to be our ticker roundtable, which is kind of what people have been asking for. And we've had so much volatility in the market lately. We haven't really had time to do much more than doing defense. So this will be a fun session tonight. This is your first time on, you'll notice your microphone's muted. That's how we can all hear Jeff and I talk. But we do have a Q&A box located at the corner, at the bottom of your screen. And if you have any questions throughout the evening, you just put those questions in there. And we'll get to those throughout the evening. If you have any questions about your account, any trade alert services, access to trade trends, Zillion, etc., email support@altostrading.com, and we'll get to those tomorrow morning. If you have to hop off, this is being recorded and will be available later tonight in the members area and also on YouTube tomorrow. Let's see, before I bring on Jeff, let me just read a disclaimer. Trading securities and options involves risk. Prior to buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to time-critical nature of trading, everything, it moved on me there. Time-critical nature of trading, broker fees, and activity of subscribers, no guarantee. Subscribers will mirror performance. Performance numbers shown are based on trades users could enter based on the trade signals. All right, that being said, Jeff, you there?
Yeah, sorry, jumped the gun there on the trigger finger.
I'm like, I don't have it memorized.
Yeah, after you read it so many times, I would think you did, but
I know, like I'm nervous about like paraphrasing it because I'm like afraid you're gonna get pinched for not doing it. So.
Yeah, you never know. All right, yeah. So welcome everyone. Great to have you all here tonight. Like Richard said, we're going to make this more of an interactive session because we've covered some pretty heavy topics on our last, 3, 4, 5 live sessions, and
it's been heavy.
Yeah, but worthwhile, hopefully.
Yeah.
But we want to give you guys. We've cut short our ticker review roundtable, so we want to give you guys more time to look at things that are of interest to you that you guys might be following and provide our analysis there. So we'll start out with our market overview, and then we'll just go right into sharing your favorite symbols, and wrap up with Q&A. So we still got people joining and all. And as they jump on here, I'm going to go ahead and flip my camera off and go over to our platform. Let's see if we've got Zillion data yet.
So before Jeff jumps in, I want to just point out the fact that Jeff got to do something on my bucket list this weekend. He was out in Austin, Texas, shooting a Southern. We had a really awesome thing planned in the near future. We're going to share with you guys, but don't want to give it away yet. But he was out in Austin, and he got to go to Franklin's Barbecue, which is like probably number 3 on my bucket list right now. So Jeff was out there partaking in the brisket.
Oh, I didn't realize. I thought you had been for some reason. I didn't realize you haven't actually been there.
Not yet. I haven't had a chance. I really hadn't had a reason to get out to Austin.
Gotcha.
And that was going to be really the main reason. Whenever I was able to square up time to go, my wife is not going to let me take a barbecue expedition to Texas with a 6-year-old. But
yeah. Well,
it was pretty good.
Oh yeah. I mean, yeah. Richard recommended it, and we went over there on Sunday, grabbed lunch. It's only open like 11 to 3, so it's like 4 hours. They're not open for dinner.
Yeah, usually they run out of food.
Yeah, they actually did. I barely, because we got there like 20 minutes before they were closing, and I barely made it. They were out of like 2 or 3 of their meats. They still had brisket and pulled pork left, and I think I got like the last brisket. So yeah, they run out like every day. But oh man, it's when you hear those things, you're like, is this hype or is it legit? And it wasn't hype. It was the best barbecue I've ever had. So if you guys are barbecue enthusiasts or ever out in Austin, go to Franklin Barbecue. It's incredible. So let's see here. It was a gut bomb though. I was like, I could barely eat dinner that night.
Yeah, I was saying you probably had the meat sweats all day.
Yeah, for sure. Cool. So, yeah, interesting thing here in the market. We had, we're looking at the S&P right now. We've been talking a lot about this double bottom from February and March of this year after this really, extreme sell-off. And we talked about the rebound. We got a nice buy signal from Trade Trend back on March 17th. That made a pretty nice run up into resistance. And we talked about this 4,600 resistance level last week, more of a zone, 4,600 to 4,650. And we did, find some significant resistance in that zone that we talked about on our session last week. And we got a bit of a retracement, and then it looked like we were going to, continue with the uptrend yesterday. And then, today, due to, hawkish statements from the Fed and all the geopolitical things going on, we had a reversal day. So reversal day is basically when it's kind of like a fake out. Let me get my drawer up here. Let's see. It usually starts with some, buying. This can go in reverse as well, but it looks like we've come down and based, and then moved up, and then the reversal day is when the high of the day is above the high of the day before, but then reverses and closes back down. So these can trick a lot of people, but generally when we see a reversal day like this, it's an indication that we'll see more selling over the coming days. But here's the caveat to that, and what I'm going to be looking for in terms of confirmation. There's a strong support at 4,500. So right there, you have a century mark there at 4,500. And that was near the low from Friday. So I would be looking for trading below 4,500, but for extra confirmation, really, I want to see a close below 4,500 to tell me that this was a little bit of a fake out here. And could be a shift back to the downside. I didn't, as I mentioned last week, really expect us to, and there was another fake out I want to point out here around 4,600, but I didn't really expect us to actually, let's do a better job drawing that here. To get above this 4,600 level. And if we did, I had mentioned that I want to see at least 3 closes above 4,600 to warrant any sort of long bias or bullish bias in the market. And this was really a fake out too. So we got a strong close above 4,600, but it was short lived, right? We only got 2 closes above that level before the bears came in and drove prices back down. So that level is now a very strong resistance, 4,600. And you can see here that we've now had 4 closes below 4,600 after this little bit of a fake out here. But you can see the price action around that level served as a little bit of support here back at the start of the year before we really saw this sell-off gain steam. So 4,600 now, very strong resistance, and then support right now resides around 4,500. All right, so we're going to want to be watching 4,500 for our cue as to whether the bearishness of the market steps back in after this double bottom and big run up. And so yeah, last week I mentioned I'd be very surprised if we made it back up to 47, certainly back up to previous all-time highs around the 4,800 level on the S&P. So as expected, kind of it's playing out the way that we talked about last week. And we've got this 4,500 to 4,600 zone that we're kind of playing with. So right now, this is going to be kind of difficult territory to navigate as long as we're trading between 4,500 and 4,600 on the S&P. But I think if and certainly being that it's Tuesday, this could easily happen this week. It would be a close below 4,500. Then that's going to pump a lot more bearish sentiment into the market, and we'll want to be looking for lower levels of support to either, for profit taking on short positions, or watching for that support level to hold and then rebound for long positions. So right around 4,400 roughly is a strong support level to keep an eye on. Then 4,300 as well. But I want to point something out here real quick, but let me just circle these. All right, so you can see here, this was kind of the middle of that W double bottom pattern, and that's at around the 4,400 level. We got a lot of support from back in later January at the 4,300 level, resistance there. You can see a lot of support there. So these are the major ones to watch for this week and into next week, depending on how price reacts around these levels. But 4,500, if I see trading below that, or certainly a close below it, and I'm going to be looking for S&P to move into the 4,400 level, and then we'll kind of just go from there and see what happens. But here's what I wanted to point out. So whenever we mark these levels, we want to kind of paint a picture or tell a story of what's happening there. So you'll see that in the past, in January and early February, whenever we bumped up against that 4,600 level, because prior to that we had broken it very strongly here in January, right? Price just blew right through it and didn't find any support until down at the 4,300 level. But so what's happening here at 4,600? Well, a lot of sellers are coming in at that level. All right, so you can see there was obviously a bit of a bullish attempt there that found resistance at 4,600 on that day, and then a lot of selling coming in there. Here, this was over 2 days, from 4,600 down at about 4,450. So about 150 point move in 2 days there. This was a very big one, of course. That was what pushed us to the lows of the year so far. So you can see that there's a lot of selling going on around 4,600 on the S&P. And since we rejected that today, that gives me more of a bearish bias. But with the caveat that we're in this kind of this tight zone here between 45 and 4,600. And as I mentioned, that could be a bit of a tricky spot to trade until we see more follow through, because it's not a real big range, right? We're just talking about 100 points. And really on the S&P, the 100 points doesn't make a trend. But when we see a rejection off one major century mark, 4,600, and then we see a break of 4,500, and particularly a close below 4,500, that's where I'm looking potentially for short opportunities into the 44 or 4,300 level. Or if one of these levels that I've marked here on the chart holds as support and we get buying pressure off that, then I may be looking for long positions into one of these levels, because once the support level is broken, it then becomes resistance. So always remember that when support breaks, it becomes resistance, or vice versa. When resistance breaks, it becomes support. And then if one of those doesn't hold, we want to be looking at that as a potential profit taking level for any future long or short opportunities. So a lot going on right now and a lot to keep track of. But right now, very near term, over tomorrow and through the remainder of the week, 4,500 is kind of the level that we're keeping an eye on right now, especially considering the rejection of 4,600 this reversal day, and off 4,600, and then being that today we closed at 45.25, so we're only 25 points above this major area of support around 4,500. So let's keep a close eye on that tomorrow. Any questions there, Richard?
No, Stephen was just mentioning if you consider the 4450 level somewhat strong as well, because there were some touches in late March and also in early February as well, 4450.
Yeah, definitely. Let's take a look at that. So a couple points. Hopefully I'm not beating a dead horse here, but I think it's so important. I'll just probably say it on every session. There's a couple things that we look at for support and resistance, and one of those is purely the numbers. So if we kind of disregard what's happening price action wise on the chart, we look at the century marks, which are going to be the 40, the 400, 500, 600, 700. The half centuries, which are your 50s, the quarter centuries, which are your 25s, and the millennials, of course, which are going to be like your 3,000, 4,000, 5,000. But the higher the interval, the price interval, generally the more weight it's going to carry in terms of significance, and that's largely on a psychological basis of how price reacts around those. So that's kind of the one thing to consider. And then on the charting side of that, the second thing to consider is when we spot one of these levels is what did price do around that? How many times does it touch that level? And it doesn't have to be an exact touch. It could be just a near touch. So it's a bit more of an art than a science. We want to visualize, what is price doing around that level? Did it find resistance there, or did it find support there, or did it find both? How many times? And then what was the magnitude of the move off of that level? Those are all going to give us clues as to how much buying and selling is occurring around there, and how significant that level is. So for instance, like a 4450, generally speaking, won't hold as much weight as a 4500 or a 4400. But that doesn't mean it's not important. Actually, let me zoom out here so we can get a better picture. I mean, you can really go back as far as you want on these, and also do them across multiple time frames. So we're analyzing the levels on the daily chart, but it's also valuable to do these on weekly charts, monthly charts, or even intraday charts if you're trying to fine tune entries. If you're opening positions intraday. So 4450, and so you can go back really as far as you want. I mean, you'll find these levels being, serving as support and resistance going back years or even decades. But generally, for me, like I look back about a year maybe. So we're all the way zoomed out on a daily chart over the past year on the S&P, and that won't usually give me enough information for touch points and things. So like if we map out 4450, we see rejection there. So that would be a resistance area, right? I see support there. Okay. A little bit of support there. Because remember, one other point. So always look at what the last touch point was. Was it the last one support or resistance before the next one, occurs? So at this point in time, in like mid to late January, it found support at 4450. But then that was broken here. It kind of served as resistance, more like a zone between 4450 and 4500. Okay, so at that point, it was serving as resistance, and then it broke. And this is really the pattern of behavior in the market. And then, well, that wasn't real accurate. It broke up there, and then see how it came back down and retested where I drew the circle there, and then moved back up. And these are often really great opportunities if you can kind of map things out this way. And it's fractal. It doesn't matter what time frame you're on. You could do this on on a 1 minute chart. The behavior is the same, so everything's fractal. It works the same on all time frames. And truly, if we had enough time on our live sessions, it would be good to do this on like three time frames. Like if we're going to be trading off the daily chart, we might want to do this on the weekly and the monthly as well. Or, if you're intraday trading off, let's say a 30-minute chart, you're probably going to want to do this on a 1 hour and a 4 hour chart as well. So go up a couple time frames from the time frame that you're actually trading and making your trading decision from. And this is what you'll see. You'll see these levels, if they break, come back down, retest. And then you want to wait for some degree of confirmation off of that level for price to move back up. But I got a little bit sidetracked there. What I was saying is look at the last result from the touch point of that level. So see out at 44.50, the last thing that happened at 44.50 was support here on March 23rd. So that's the last thing that's happened at that 44.50 level. So that will remain support until that breaks, right? So this, see how this was resistance, and these would have been kind of short-term types of trades, but see how this was resistance, okay, and it was broken. So what does that tell me if I want to, take a strategically timed position, directional position on the S&P? Well, I want to wait for price to come back down because remember, it broke, find support. So here in like around the third week of January, I would have wanted to have this level mapped out and see what happened at that level in the past. So the last thing it did is it served as resistance, right? And it was broken. So what I would then be looking for is for price to come back and use it as support. And this would have worked out really perfectly here on this day. And then you get a nice, what is that, 150 point move off that level. Okay, so the last thing that happened here was now support, all right? And then it came down and broke there at the start of February. So then what do I want to do? I want to wait. Now it's getting a little messy here, so let's just clear this out. So then what do I want to do? I want to wait for, once it breaks, I want to wait for price to come back up and find resistance there. And there it was. That would have served as a nice 250 point move down to the 4,100 level. Okay, and then so at this point in time, like here in mid-March, what would I want to be looking at 44.50? I want to be looking what happened the last time price was at that level. Well, it was resistance. So I want to wait for that to break. Okay, there was the break. Happened pretty quickly over a couple days. Came back down, retested. And there's the 150 point move up into the next resistance zone. All right, so that's kind of how, when you kind of tell the story about what's happening at these levels, to kind of give yourself a picture of what's going on, and that's what that's how I do it. I tell myself a story to paint that picture so that I can visualize it and see what's going on, and it helps tremendously. I mean, it's a really valuable exercise, and it really, I think if you do it regularly and get used to it, you can do it pretty quickly, but you'll find that you'll eventually you're going to be much more in tune with what's going on in the market. So it really is valuable. So yeah, 44.50 is something one to keep an eye on because we've got resistance there. Oops.
And Jeff, before you go on, I just want to stop you before you go any further. This stuff, and then you'll just kind of say it very loosely, but what you just told people, I don't know if you guys are paying attention or hopefully writing it down, but I would advise everyone to watch the replay. But what you just said loosely is really an incredible piece of trading advice that honestly that could really revolutionize some people's trading. Just the fact that just going through those extra little steps that you just mentioned could really make all the difference for people. So
I think so. I think so.
You've already kind of talked about it, but you guys, I encourage you to watch the last 10 minutes just to kind of let that sink in, because honestly, that's one of the biggest keys that people miss. And like you said, you tell yourself that story, and really want price action to do certain things before you'll take a trade. And if it doesn't, then maybe that's not a trade for you. Maybe you miss the move, maybe you don't. But when you do get it, it typically will work out pretty well for you.
Yeah, exactly. And that's the beauty of it. Like it's telling yourself that story is like kind of being prepared for what's to come. So it's like versus using a lagging indicator, I mean, it's so much more valuable. Because if you do this ahead of time, you're not going to be caught off guard. You're gonna have a good idea of what's potentially going to happen around these levels. So it's really important to do this regularly and then keep the levels on your chart. We take them off here because we're looking at different things, but when I do this in my own charting platform, I keep those on there. So I'm not surprised when something happens, a day later, 2 days later, a week later, two or 3 weeks later, or months even, because the market never forgets these levels. So it's really, really crucial. So let's take a look at the VIX here real quick, because there's a very timely and significant occurrence on the VIX in the context of the rejection of the 4,600 level on the S&P. And we did get a trade trend buy here at the end of March. Okay. So we had been up around the 37 to 39 zone on the VIX. Big retreat in the context of the buying in the S&P that drove prices up into that 4,600 level. And then what happens? We get a buy signal on a close below 20. So I've emphasized this on virtually every past live session is watch for these buy signals from the trade trend algorithm below the 20 level, because that's our warning that especially in the context of the S&P reaching a strong resistance level, that we could see a more extreme sell-off. And this is all about odds. Obviously, it's nothing is guaranteed, but this is my warning. When I see a buy, and sometimes it could take a while. I mean, we've kind of been sideways ranging here, but the last 2 trading days, so Monday and last Friday, we got 2 closes below 20, but today we got a close above 20. And it was a big one. So look at the range there. That's what I also want to be looking at on the VIX, is what the range of the bear bull candle. So there was a wide range, high to low, bear candle yesterday, followed by a wide range, high to low bull candle today, and a close above 20. So that tells me volatility is picking up, and in the context of the S&P hitting resistance and potentially, and selling off and potentially reversing the trend, I want to be looking at that in the context of what the VIX is also telling us. And when we look at support on the VIX, same thing that I just emphasized on the S&P. So what happened around this, 19 to 20 level or zone the last time it was there? Well, right, huge sell-off. So big VIX spike, which correlates to inversely correlates to a sell-off on the S&P, and now we're back down at that level. So that buying, or I shouldn't say buying because it's the VIX, but that spike off that level on the VIX indicates significant selling pressure on the S&P, and basically the VIX being a forward-looking expectation of volatility over the next 30 days is telling me that market participants and option pricing models are anticipating a potential sell-off. So that was the kind of the big occurrence today is the VIX spike. So spiked up over 13% and closed actually above 21, but definitely closed above 20. So just be careful there. But it could validate the analysis that we just did on the S&P when we look at But again, last time was earlier in February. We were down at these levels on the VIX, and now it looks like we're finding support there, and bouncing off in the context of the resistance rejection at resistance around the 4,600 level on the S&P. Lower supports at more around 16. So those are kind of the levels we're watching. If we do get a VIX spike off the 19 to 20 zone, we'll be looking at 27 for potential turnaround. So again, always look at the VIX in the context of the S&P and what it's doing and the support and resistance that we've mapped out on that.
Man, trade trend's just right on time with that, isn't it?
Yeah, so we'll see what happens here, but I'm going to be looking for, and last week, if you guys didn't see last week's session or didn't attend or watch the recording, in fact, I don't know that, I think I need to get the recording up there. I had to go out of town, so I'll make sure that's up on the YouTube channel, but we talked about ratio back spreads on the VIX. So that's a good one to watch because these are good times to set up ratio back spread. So we covered that on our last session. All right, so then let me look at the NASDAQ real quick. Oh, and I don't think I mentioned there's an open sell signal on the S&P for trade trend too. So the sell warning was March 31st, triggered April 1st, Friday. Then again, we did get this little bit of a rebound and continuation of the sell-off. So there's an open sell signal currently on the S&P. And then I believe there's one on the NASDAQ. Yeah, same thing on the NASDAQ. All right, so this level around 15,200 that we rejected, and we talked about that one last week too. It was a big one. So again, the fact that we're selling off this major resistance area is bearish, and the NASDAQ obviously had a big sell-off today, closed down almost 2.25 points. So tech's really leading this sell-off that we're currently in. So 14,800, that was kind of our support from today, but not real strong or significant, but something to keep an eye on. So just like for the 500 level on the S&P, the 800 on the NASDAQ is one to watch. And we found support there today, but didn't get much of a bounce off, which is pretty bearish. So a move below 14,800 or certainly a close below it over the coming days is going to be bearish, because then we don't have a whole lot of support until right around 14,300. If that breaks, then we've got some pretty strong support around 13,800, and then our double bottoms right around that millennial mark at 13,000. So those are our major levels on the NASDAQ. But if we break tomorrow, and watch for false breakouts always. I don't jump in short just because trades below 14,800, because you get fake outs all the time. There was one here, right? So it did find support there, but this would have been a nice, if you were just looking for a really quick long trade, rejection in terms of support off that level up into resistance and then back down. So I really want to see close below 14,800. And then if so, I've got some room to play, because the next one, the significant one, is kind of around the 14,300 to 14,400 level. So I got a little bit of room there if unless we really trade down strongly tomorrow. And I'm watching the futures right now. They're really not doing a whole lot. Let's see what the NASDAQ futures right now. Yeah, they're pretty much flat. So we probably won't see much movement until the European session opens up. But yeah, these are the major areas of support to watch on a break of this 14,800 level. So go ahead and pause it there, see if there are any questions, and then we'll open it up for our ticker roundtable.
No questions. Actually, everyone's pretty quiet tonight.
Cool. Wait,
Everybody's all burnt out. It's been a crazy couple of weeks.
yeah, I do see one, and maybe you're just looking at the chat. Looks like someone wants to look at SPX with OBV.
Yeah, I was gonna use that for the roundtable, but go ahead. Same
Okay. Well, let's just
segues
start
out
with,
of that.
yeah, let's start with that then.
Yeah.
So let's clear these out. Oh, wait. Okay, so OBV, if you guys weren't on that session a couple, 2 or 3 weeks ago, on balance volume, can kind of give us a clue of institutional buying to see if there's accumulated buying going on. And let's see here, zoom in a little bit. So same thing, look for well, everything that we've covered so far tonight, look for on like support and resistance in on balance volume. So like, let me actually expand this so it's easier. There we go. Okay, so you'll see right around 20, we've got some resistance, also kind of right around 16. Okay. So when you see a run up in any security that you're using OBV on, but in this case, we're looking at the S&P, when you see a run up, look for the OBV to hit resistance at the time that the SPX is. And that might tell us that there's some significance to that level on the price chart as well. But you see how we've got a flat on balance volume. So there's not any buying accumulation right now. So as the OBV flattens out, and if you see it turn down, that just lends more weight to this 4,600 rejection on the S&P and any sell-off that takes place after that. So strong resistance right around kind of little above 16 on the OBV, and that's in millions on the S&P. So yeah, this OBV indicates to me that there's the buying is slowing down, and it's hit strong resistance. And as long as it stays near that, and certainly if it comes down from there, it is telling me that there's more institutional selling taking place in the market. So, all right. Let's see. Let me see if refresh Zillion, and then we can do ours.
Yeah, I think Bill said it's updated.
Okay, cool. Let me take that off. Yeah, because let's take a look at the sectors and see. Obviously, tech is an underperformer. It's actually not the top underperformer. It's number 3, but industrials and energy are getting hammered pretty hard right now. Utilities, real estate, and consumer staples are our top 3 performers right now. You can see that risk is starting to rise. So it was in the lower zone, but it's starting to tick up. Trend is basically we're at a point of inflection, I think, and it's kind of right there in the middle. So we were in a stronger bullish trend, but we're seeing that kind of start to tick down, and we're seeing more sell signals from our algorithms than we are buys. So overall, kind of a bearish short-term picture for now. So let's go ahead and take some symbols. What's the first one we want to look at?
Let's see what we got. Stephen wants to see NVIDIA.
All right, NVIDIA. All right, so NVIDIA. So we've gotten some nice ones, signals here on NVIDIA in the past. We're
Tradition's
just,
always done well there.
yeah, for sure. It's, it's a volatile stock. It makes big moves. We're just coming out of this green cloud. It looks like our divergence cloud, it was green. But looks like we had some good sells down here. Double bottom. So kind of similar picture to the S&P or the NASDAQ. But what happened today is significant. So there was a sell here in March, triggered. Trigger and it's still open. So there's an open sell right now. But what happened today is this 270 level, which was very strong support, was broken with a lot of conviction, right? Stock closed down over 5%, well below the 270 level. So this current open sell signal on NVIDIA is looking good. And I'll make a comment too on but see all these major levels. So we could see price come back and retest 270, but it could continue moving down before it does that, before it finds support. So support is going to be kind of right around 245. And got a little support today on the close because there's support from back at the end of last year, resistance. So I want to be a little careful around the 260 level because of that support area. So what I was going to point out, let me zoom in a little bit. So the sell entry would have been current sell signal at 270.72. Okay, so there's where the algorithm gives the entry, 270.72. So yeah, we're down, almost 11 points off that level. So nice trade so far. If you had taken the signal, trailing stops all the way up here above 291. That might be a little bit aggressive, considering that there's strong support here at 270. So if I had taken a trade off this signal, I may be a little bit more aggressive to lock in profits, or at least move my stop to break even, or close to reduce my risk in the trade. So since I know that strong now resistance, because it was support, resides at 270, I may look, if I had taken a short trade on this at although and I suspect tomorrow the algorithm will trail the stop down closer to the 270 to 275 level, depending on what happens tomorrow. But I would, personally, if I had taken a trade off this sell signal, I would probably trail my stop just maybe a little above 270 or even above this little swing high here from the high on April 4th, just to protect it a little bit more. Or, you could even move it all the way to break even or scale out of any short positions, scale out of half the position, move the stop to break even, and then look for continuation of the sell-off into lower levels of support. But this one's looking really nice. Got a nice buy here, March 16th in the green cloud. These are ones I like to look at. Green cloud, buy, and support area. That one ran up really nicely. So the entry would have been around 246. Using the trailing stop, it got out at 274. So, nice, what is that? Almost 30-point move. 46. Yeah. So that was a good one. And NVIDIA's sell right now, looking good. What's next?
All right. Got a handful. Hey, Brian, can't have seen Brian in a long time. Shopify.
Okay. I haven't looked at Shopify in a while. That's really been hammered. It's really started to turn over before the broader market sell off this year, but let's see what's going on currently. I see a lot of price consolidation, a lot of congestion, sideways movement right now, which is something that if I weren't in a position, I wouldn't look at opening one in such sideways price action or consolidation. We haven't even, over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13 trading days, haven't been able to manage getting out of this range from March 18th. It looked like a strong breakout there. I don't know much about fundamentals or what might be the catalyst for this sideways movement, but yeah, it looks like it's just not doing a whole lot. But these can be opportunities to look for breakouts of in one direction. A lot of times when you see consolidation like this, it ends up leading to a strong move, directional move up to either the upside or downside. So what I do see is that line here, the high around 800, a little below, but on that particular day, but the 800 level is very strong resistance. So strong support, broke through back in February, mid-February, came down, came back up. So if I were to see a break of 800, that would be bullish, but I want to make sure it's confirmed. I want to see at least 3 closes above 800, or if it really blows through that, I want to wait for price to come back down and retest. So like if we were to blow through 800 faster than I could get into a long position, because I want to wait for a few days of closes above that level for confirmation, then I just wait for the retest and see if that support holds at 800 to initiate a long position. So right now 800, and then it looks like about 640 is the zone I'd be watching. As long as price is moving within that zone, it's probably going to be a lot of chop, but any break between that or outside of that, I should say, zone would be looking to the downside, support kind of around 500. And so 500 is our major support. And then if we break out of 800, be looking at, looks like right around 1,000 as a potential, profit target on a break. But yeah, Shopify is looking a little congested right now.
All right, let's see. Looks like Moshi always has a Aussie yen, AUDJPY.
Okay.
He's like our lone forex guy.
Oh yeah. I think we looked at Aussie yen last week, didn't we?
I might have. That's his pair.
Yeah, because it's been in this huge run up, because I often see some of these currencies uses like safe havens, like when there's a war going on or geopolitical risk stuff. So yeah, huge run up here. So these are always tough. Let me see if I can find any resistance. Really having to go far back here. Maybe we're getting close. Yeah, certainly for, long trade. So it looks like kind of the 90 level would be our support. Near term support. So I keep an eye on the 90 level and the 86 level, 85 to 86 for support. There's an open sell right now. So pending sell came in March 29th, triggered March 30th. There's that kind of support there around 90. If you had taken a short trade off of this one, trailing stops now been trailed down today to about the 90, close to the 93 level, a little below. That 93 could hold. We'll see, but oftentimes when you get these parabolic moves up, you'll see a little bit of back and forth between buyers and sellers before the trend either resumes or reverses. So certainly, this 94, what is it? What was the high on this one? So yeah, it's about 94.30 and 90.75 are going to be our kind of near-term levels to watch for tomorrow. Since looks like this is from April 4th. Is this even refreshed? Oh, because it hasn't refreshed yet. Our forex doesn't refresh till what time, Richard? Is it?
I feel like it's 9. Let me see.
Yeah, it'll refresh this evening. So it actually hasn't refreshed. So I don't. Let me go over to.
I think there's like a menu or something.
Okay, so I'm glad I looked over this because so it did break. It already broke through there. Yeah. So right now, see how so there's the resistance up there around the 94.25 zone. And yeah, it's just this is a tough zone to be traded in because the move's already taken place. Obviously, it found its top and it's sold off over a few days and then rebounded. So more than likely, you'll see the Aussie in range here until it decides if it's going to go above or below. But this is one when they get in these zones after parabolic moves or strong trends. I don't want to trade this zone, particularly because it was hard for me to even find resistance going back several years. So since I couldn't find a strong resistance level and supports significant supports down at much lower prices, near-term support here right around the 90.75 level. This is going to be a tough zone to trade. So I'd be looking for either this resistance area to break and then retest, or for this swing low right here to break, close below, and then retest for shorts. That's kind of how I would play the Aussie yen if I were going to be looking to trade it. Because right now it's just, it's in a tough zone to really maneuver.
Okay. Well, let's see what we got. Larry's asking for Home Depot.
I should own a Home Depot stock because I'm there like every weekend. But I'm glad I haven't owned it since the start of the year. It's gotten hammered along with the rest of the market, but could be a good buy. It's down from, it was up at around 420 towards the end of last year, and it's trading down, over 25% from the highs. It looks like it's finding some. This is actually a good one. Good. Larry asked for this one.
Yes.
Yeah, this is a good one, Larry. Good suggestion. There is really strong support at 300 here. So looking back to June of last year, you can see when price reached that support level, it made a huge move. So roughly 120 point move off 300. It made a pretty good move here. So remember when we look at these levels, what happened last at that level? Well, we're kind of in the midst of that right now, and the last occurrence from 300 was buying off 300 up into the 340 zone. So you can see at 340, very strong resistance, and any move off 300, I'd be looking at potentially 340 as a profit taking area. Now we've now had 3 closes above 300. That's a good sign. But what I like about this opportunity is, it could be done with a pretty tight stop. Like, we're not far off from support, and it's held now for a few days. A long position could be managed with pretty reasonable risk, because today the close was 304.86, and we're looking at like below 300 as a support. Technically, the lows were 298.90, 298.89, 299.29. It's a little below 300, but you could look at a potential long opportunity. There's no trade trend buys right now. There was a sell here, but it looks like we're out of the red divergence cloud, and so if I see a green divergence cloud in the buy, then I'm really all over it. I mean, look at this last one. This was from March of last year, so this is just a little over a year ago. Huge buy off that 250 level. So again, like, remember how we've been really emphasizing these century marks and half century marks? So look at that. Like, that's a perfect half century mark buy with a green divergence cloud right off that level. And now we're at a century mark, 300. So, might be worth waiting to see if we get a green cloud or a buy from trade trend, or both, for confirmation. But this is one I might put on my radar, because it's gotten hit so hard, and probably without a lot of warrant. I mean, I think it's strong company, strong stock. I would be looking for long opportunities here off major support levels at some point. So that was a good one to look at. Let's take a couple more.
All right. Had a couple people ask for Tesla.
Okay. Yeah, so nice buy here on Tesla. And we've looked at this one several times recently, kind of talked about its ranging behavior. So I see, strong resistance in the 1150 to kind of 1250 zone. Rejected today. So this buy signal looks like was, so there's the pending buy warning. There was the trigger. So that would have been kind of right around the 875 trailing stop up to 1075. So picked up 200 points. That's a nice buy signal there. There was a sell here. Let me clear these out. It doesn't look like it triggered. Oh, maybe it did. Yeah. So the sell was taken out on this spike here. If you would use the trailing stop, and then of course within a green divergence cloud. So I'm on aggressive mode right now, so it's going to show sell signals in green clouds. If you don't want to take sell signals in green clouds, you can toggle over to conservative. So it's just conservative is just going to show you buy signals in green clouds or sell signals in red clouds. So I've got all the signals turned on. This wasn't necessarily a bad sell signal, because it was off a resistance area. The only kind of conflicting indicator was being it was in a green cloud. But unfortunately, this could still come down off that resistance zone into support, but that trailing stop was just probably a little too tight. Let's see. But for support, if Tesla continues to sell off, I'm looking at 1,000, so millennial mark for support, and half century mark at 950. So those could be, you know, and then the true bottom of the range. I mean, there's definitely some support kind of around the 900 level, but really wide range on Tesla, right? You know, it's looking at really 700 up to that 1150 to 1250 zone. So big range, but you know, we're near the top of it. So I wouldn't be a buyer right now of Tesla personally, just because of the number of extreme sell-offs that have occurred up in this zone. So maybe, you know, would be a buyer down at these lower levels of support, at lower ranges within the zone, or you know, short the stock, or you know, play a bearish option strategy off that zone. So it looks like we're kind of topping out on Tesla right now. All right, let's take one more before we.
All right. Jose asked earlier for NUGT.
NUGT. All right. Oh, we may not have that one in our dashboard. Oh, geez, my keyboard's going crazy. Okay, yeah, we don't have NUGT loaded in Zillion, so let me look at. Keyboard is being weird. Yeah, a lot of price consolidation right now on. So this is a leveraged gold ETF, gold miner ETF. So it's very volatile, makes big moves, intraday moves, but strong resistance right around the 75 to. What would that be? A 75-80 zone is a strong resistance. You can see here that big sell-offs from that zone in the past. NUGT tends to range a lot, so you know, very strong base support around 40, 60. 60 would kind of be the main level. I'd be 60, 65. Would be the main support zone I'd be watching. So keep an eye on, since we're seeing rejection off this 75 level. The really next significant level of support that I see is at or around 65. There was the last touch point there in March, and you can see there was a lot of price action here around that level. So strong support 65 and 60. So we'll call it a support zone between 60 and 65. And looks like significant rejection off 75. So I'd be expecting, you know, a potential sell off into the 65 level on NUGT. And no current trade trend signals on that ticker as of right now. So.
All right.
All right. Any other remaining questions, general questions to answer before we wrap up?
No.
And by the way, guys, thanks for sharing all those. Those were great ones to look at. Let's see.
Looks like Larry just popped one in. He's saying, please explain why the green and red cloud is more intense towards the center than the edge.
Shoot, I wish I had Daniel on to give an explanation of that. I don't want to tell you the wrong thing, but I think it's generally when the cloud is losing, the divergence is losing steam, and the cloud may be ending, it tends to lighten up. But that'd be a good question. Yeah, be a good question to send into support. Just to we can have Daniel. He's the one that developed the algorithm for the divergence cloud. We can have Daniel chime in on that, but I believe that is the reason. Thanks, Ed. Good to have you on. Thanks, Larry and Phil and Steven, Rick, Moshi, Steven. Yeah. All right. Bill, Cam. Good to see a lot of you guys on. Brian, haven't heard or talked to Brian in a while, but good to see you on Brian and Grant and all of you. So if you guys have any other questions, shoot us an email, support@altostrading.com. You can also give us a call at our toll-free number on our website. But for tomorrow, be watching the VIX, because again, close above 20 today, buy signal on trade trend, major rejection on the S&P off 4,600. So keep an eye on those closely for the rest of the week when you're making your trading decisions. And with that, we'll wrap up, sign off, and wish you guys a great rest of the trading week. Happy trading, and we will see you guys next Tuesday.